1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.
Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, we will be addressing your queries during the show. So please keep your comments coming on our live YouTube feed. But let's kickstart with taking a look at what the global handover looks like. The S&P 500 posts its worst day in over a month, while the Nasdaq snaps a 7-day winning streak as disappointing macro data reignites recession fears. Stocks in the Asia-Pacific open lower, while the SGX Nifty also signals for a weak start to the Indian market. Major earnings from the FMCG basket today. Asian Paints expected to report double-digit revenue growth on a high base, along with an improvement in margin. HUL is also going to be reporting an improvement in margins with volume growth of 4 to 5%. Why newly listed stocks have caught mutual funds fancy and should you also invest? We find out on the show. Stocks in focus are Adani Enterprises, IndusInd Bank and Aurobindo Pharma. All right, let's get going. Ajit Mishra is here from Religare Securities. Let's talk technicals with him. Morning, Ajit, and thanks for coming on board. Let's talk about the trade setup and, of course, how the SGX Nifty is pointing to a weak start. It's also the weekly expiry. So what kind of an action should we foresee on the Indian bourses?
Yeah, good morning, Karunya. So, Karunya, yes, we are seeing, weak global clues, and that is reflecting in the SGX as well. But if you notice in the last two trading sessions, Karunya, we are seeing positive bias across sectors, and especially, the select index majors, basically, which have helped the index to inch higher and cross the immediate hurdle at 20 EMA around 18,100 mark. So it's important whether we manage to hold that level in today's trade or not. And today being the weekly expiry, obviously we expect the volatility to remain high. So any dip towards 18,090, 18,100 zone can be considered as a buying opportunity after the initial gap down. And one should not maintain a very strong major stop losses. Close around 18,040 can be considered as the immediate support and the stop for this position also. And broadly, what we are anticipating that after crossing this immediate hurdle at 20 EMA on the DD charts, 18,250 to 350 is something that Nifty should test in days to come. So the tone is likely to remain positive. Yes, the global clues, earnings, they'll continue to trigger the volatile swings in between, but the tone is likely to remain positive. The challenging part is that banking might not perform in a similar manner, means the outperformance which we were seeing earlier might not come. So for that to resume, we need a decisive close above 42,900 mark in the banking index. So we have immediate hurdle at 42,650 and then 42,900. But meanwhile, since we are seeing like select stock from the banking and financial space like HDFC Twins, they are doing well. So we hope that this momentum which we are anticipating in days to come may also help the index to inch further higher.
Okay, all right. Let's also understand how some of these individual stocks are looking in trade. Of course, Adani Enterprises will be the big name to watch out for. They've set the FPO floor price at 3,112 rupees a piece. The cap price for FPO is at 3,276 rupees a piece. Retail investors in the FPO will be getting a discount of about 64 rupees per share. Now, investors can bid for a minimum of 4 shares in this FPO and thereby in multiples of 4 as far as the FPO shares are concerned. The company plans to raise about 20,000 crores via this FPO. Let's talk about Adani Enterprises, how the technicals are looking. Of course, everybody has talked enough and more about Adani Enterprises on the fundamental side. We at Moneycontrol have also been covering that. But if we look at a purely technical standpoint, how is it looking?
So, Karunya, we all know the kind of run-up that the Adani stock had in the recent years, and now from the last 5-6 months, if we talk about Adani Enterprise specifically, after making a new record high around 4100 plus zone, we are seeing gradually profit taking or retracement, which is healthy as long as we manage to hold 3200 mark. So the near term indicates that this sideways tone will continue, and for any sustained uptrend or any reversal of this consolidation bias would only come once we cross 3900 mark decisively, or in case if we form any reversal pattern, which is not the indication yet. So for a very short-term perspective, I would say that one can avoid any fresh position at the current levels in case if the view is very short-term. And for the existing position also, one should look for any rebound towards 3700 mark to exit longs, because indications are in the favor that this consolidation that we are seeing is likely to extend for at least a month or two.
Okay, all right, understood. What about HUL? Of course, the earnings for Q3 will be in focus today. It's an important one to watch out for. How's the stock likely to react ahead of that today? The street is expecting double-digit growth in their top line, but margins again could be tricky. And 4 to 5%, like we flagged off in the headlines, that's the kind of volume growth that the street is also factoring in. So ahead of numbers, how could the stock behave today?
So Karunya, this stock made a new record high in September 2021, and post that, there was a phase of a decline wherein the stock corrected from roughly around 2800 mark to 1900, and since then we are seeing a gradual recovery almost from last 8-9 months. The stock has been witnessing gradual recovery, and now it's again closer to the record highs levels. So we expect this consolidation to end soon, and importantly, the FMCG index also basically is favoring in the same direction. So as of now, in case if you are holding longs, you should definitely continue. 2600 is we are eyeing as an immediate support, so that should be a stop. And above 2730, in fact, we expect the stock to witness fresh momentum, and that could help the stock to make a new record high. So in that case, above 2750, you can expect this stock to retest level close to around 2900 to 3000 levels in week or 10 days. So 2600 as a stop, you can continue to hold, you can buy fresh also.
All right. Okay. What about Asian Paints? Another important one to watch. How's that looking on the chart?
So in fact, both these stocks from the paint basket, Asian Paints and Berger Paint, are slightly on the back foot. So if you remember that the stock was around 3500 mark in September 2022, and since then we have seen the stock gradually retracing and inching towards the monthly support area. Close to around 2900 is what we are currently seeing. I feel that in case if there be any recovery, it might again attract selling pressure around 3030, 3050 mark. So it's still, I would say, from a trading perspective, it's a sell on rise candidate as long as we are not seeing any sign of reversal. And for the existing position, in case if somebody have playing a rebound, considering the kind of cuts that we have already seen, any bounce toward 30,000, 3050 area, 3100 zone can be considered as the zone to book profits and avoid fresh long at the current levels.
All right. Okay. Moving on then from earnings candidates. How is IndusInd? They delivered their numbers yesterday. Q3 profit was up 69% year on year. Provisions have fallen quite considerably. Net interest income has grown close to 19% YOY. Again, largely in line with what the market expected. So is it likely to go down well with the street today that the numbers have been largely on expected lines?
So in fact, yes, Karunya, because if you noticed, within the private banking space, ICICI and Axis, which were earlier, acting as the leaders, are witnessing profit taking. But IndusInd Bank, which was earlier underperforming, is holding very strong. So that clearly shows the kind of relative strength that we have in the counter right now. And I feel that yes, the tone is likely to continue, but for any fresh momentum, one should wait because we have multiple attempts to cross this 1280, zone in the recent weeks. So I doubt that we're going to see any fresh momentum. But yes, the tone is likely to remain positive, and existing positions can be held with the stop up around 1185.
All right. Okay. And the last name on our list today is Aurobindo Pharma. They've received US FDA's Form 483 with 2 observations for Unit 1 and Unit 2 of its subsidiary, which is called APL Healthcare. These units are situated in Jadcherla in Telangana. They were inspected between 9 to 18 January. And 2 observations and that's the update that we have as of now for Aurobindo. How's that one looking? We're getting a lot of comments also from our viewers to tell them about Aurobindo. So take it away.
Yeah. So see, Karanya, if we dissect the pharma sector performance, you will see a couple of names which we have shared earlier also on the show, that Sun Pharma and Cipla are the 2 consistent players. Along with Torrent Pharma, which are holding strong or showing relative higher strength. Then we have stocks like Divis, Dr. Reddy's, which are trading in the middle of the trend. The tone is sideways to negative. And lastly on the list, stocks which are hardly seeing any respite, despite the rebound or pause in the index. So Oro Pharma, Biocon, these are the counters which fall in that category. And despite oversold position, we are not seeing any decisive rebound in the stock. In fact, on every marginal uptick, we are seeing the celebration, resuming with strong volume. So that clearly indicates that bears are completely under control. So I would recommend, in case if somebody is holding this stock, it's time that you should think about switching to Sun Pharma or any other pharma names which are trading around the record highs. And for fresh shorting also, I would recommend one should wait and let the stock rebound towards 460-65 zone. Around that area, one can look for going short, but not for the long trade.
All right. Okay. Moving on to some more viewer comments and queries. Lots of interest in banking space still. So we'll address them together. But first, I want to start with Abhishek Chaube's comment, and he wants you to talk about Tata Tele. How is the chart looking for Tata Tele Services?
Yeah. So Tata Tele Services, currently we all know that the stock, witnessed almost 90-degree kind of a rise from the level of around 20 to 300, and the decline was also like we had a similar kind of retracement with lower circuits. But now the stock has started trading. Normally we are not seeing any circuit limits from last couple of months now. But the tone is still negative. So Abhishek, I would recommend you to please avoid this stock in case if the view is for trading. What we have observed is that in the recent corrective phase, wherein the market has been witnessing profit taking or a consolidation, mid cap and small caps are hardly participating yet. So we have like a couple of names from the mid cap basket. Definitely they have done well, but small cap we have hardly seen any participation. So the idea is, at least if the view is short term, you should stick with the index majors and counters which are showing relatively higher strength, and TTML is not on that list. All
right. Okay. Moving on, we have some queries piled up from the private sector space, private sector banking space. Ishan wants to know prospects of HDFC Bank, if they can buy at the current level. Kunal is asking about ICICI. You have Rishi asking about federal banks. If you could tell us how all these 3 private lenders stack up. And, there's one query on PNB as well, if you could address.
All right. So yes, banking definitely remains on market radar always. And HDFC Twins, after like long underperformance, finally we are seeing sustained up move. And in fact, in the last trading session, the contribution from the HDFC Twins was significant alongside with the select index majors. So we believe that this tone is likely to continue in HDFC Bank, and yes, you can consider going long even at the current levels. 1610 should be a stop. It's currently quoting around 1637, and gradually we expect the stock to retest the level close to around 1680 to 1700. Rest among these stocks like Federal Bank definitely looks very strong to us. Like we have hardly seen any retracement in this stock also. So that that in case if the market is going to resume the trend, and especially the banking index resumes, the positive momentum over 42,900, then this stock is likely to outperform. So yes, you can accumulate this stock to in the range of around 132 to 134, and 128 should be a stop. And since this trading at the record high, the upside is open. So you should keep on trading your stop losses on every rise. And rest of the stock like ICICI Bank, Karanya, we feel that it could be a marginal recovery from this trading perspective. But I feel that IndusInd Bank, Federal Bank are the better candidates to trade in. ICICI, it's okay in case if you are looking for investment opportunity, not for the trading. And lastly on the list, PNB. See, PSU baskets off late we were seeing resilience, but in the last trading session the trend has reversed. So earlier it was the PSU bank were holding strong while the private banking were witnessing the beating. From the last couple of sessions we are seeing that it's slightly on the back foot. So it's still comparatively stronger if we compare it with the other PSU names. But I feel that for fresh buying, private bank should be preferred.
Okay, all right. Very quickly then, couple of more questions. Arun is asking if it's a good idea to add Lux Industries for the long haul at the current juncture. Good idea to invest here?
Yeah, so Lux, see, I was not tracking this stock for quite some time, and what the charts are indicating that in beginning of 2021, the stock was at around 1525. And then it rose to around 4,800 mark by the end of the 2021. And again, we are trading around the beginning of 2021 levels, close to around 1,500 mark. So such volatility, I strongly recommend not to look as a buying opportunity in case if the stock has corrected significantly, from the top. So there could be some reasons behind this. So as of now, look for the positioning based on the financials, and let the earning also unfold for the stock, and then you may take the decision. But as of now, not on the basis of charts that we are going to see any respite anytime soon.
Okay. Can you give your view on Cochin Shipyard as well? A couple of comments there. I saw the last one from a viewer named Rajiv. So if you could tell us about how Cochin Shipyard is looking on the chart.
So, Karanya, in the recent months, we saw the shipping related stocks were in traction, but I doubt that people might have taken stop losses because the momentum was very high. So in case if you are stuck at the higher levels, I would recommend you to hold, because the retracement of the entire move from 280 to 680, it's almost like in the middle of that band, close to around 500 we are currently trading in. So there is a possibility that the stock might undergo into consolidation and witness a gradual recovery. But fresh buying I would not recommend, because the kind of quantum or the momentum that we were seeing earlier, that we might not see, and it's likely to be a more prolonged consolidation phase the stock is likely to witness.
Okay.
So any rebound towards 560, 580 levels, you should try and exit.
Okay, Ajit, request you to stay on with us. I'll come back to you for your preferred picks in the market. I want to touch base with Karan Taurani as well. He's joining us from Elara Capital to discuss the performance of newly listed stocks and, of course, the prospects of other new age companies that have entered the market and got listed on the market last few years. Karan, thanks for joining in. Want to understand why is it that mutual funds have been lapping up all of these stocks that got listed in the month gone by, whether it's Kfin Technologies, Sula, Landmark Cars, Elin Electronics, because before the listing, a lot of people had raised very relevant concerns about financials, competitive landscape, earnings visibility, but clearly 850 crore worth of shares have been mopped up in a matter of days. Help us understand what's happening.
Right. So some of these companies, like, specific to Sula, if you look at the wine industry, I think the growth rates are at a premium. And in terms of the industry as a whole, eventually it's a part of the alcohol industry. And there is always, this risk for overhang in terms of, some change in terms of state regulations, because, that is something, which really changes the profitability for these alcohol companies. So if you look at Sula broadly, I think they are the most preferred, or rather, they get a bigger benefit as compared to beer or spirits as far as state excise is concerned. But lately, some media articles pointed out that Maharashtra, is trying to roll back the VAT refund that they would get, and that would kind of have a big negative impact in terms of their overall profitability, because I think Maharashtra is a big market. And I think second concern in Sula is, about scale, because clearly if you look at wine as a category in alcohol industry, it's accepted only in the metro cities, which is there. So it's more in the likes of, Bombay, Bangalore, and Kolkata somewhat, and Delhi, of course, as well. So I think acceptability of wine as a product in tier 2 and tier 3 markets, and, Sula is, scaling up in terms of volume growth is another concern, which is seen basically. So I think these are things largely which are playing down, in terms of valuations, and these were discussed in a lot of detail, before the IPO as well.
While the stocks which got listed amid so much volatility in December, the names, the big names that got listed the year prior, 2021, which saw an influx of big companies, big brands lining up and queuing up to get listed on the buses, they still continue to languish, they still continue to correct, they don't have any takers even at very, very low levels. So what's happening in terms of especially the new age tech companies, because the likes of Nykaa, the likes of Paytm, Car Trade, they all continue to still be largely a cautious sort of a bet as far as investing is concerned?
Right. So, the scenario has changed a lot since the last 1 year. And one big issue was, the rise of interest rates in the US, and the macroeconomic headwinds and the political uncertainty as well, which is there around us. And I think this is having a severe negative impact in terms of valuations. In fact, if you look at the private market, it seems to be very tough in terms of, getting those kind of valuations what they were getting a year ago, right? And second reason is that, most of these companies have also, kind of failed to showcase a path to profitability. Except for Nykaa and Affle, which would be some of the, the internet companies, rather, so call it, none of these companies actually have showcased some strength in terms of making a reasonable profit. Zomato would be at somewhere close to 3 to 4% in terms of, contribution margin as a percentage of GMV. But I think apart from this, I think profitability has been a major issue. And I think, because, over the near term, over the medium term, you are going to see headwinds in the form of customer acquisition. These companies may not be able to, spend as aggressively as they were doing a year ago in terms of, customer acquisition costs, in terms of marketing spend. And that will eventually have a negative impact, to their subscriber base, or, to their customer base. Even the customer stickiness and the conversions as well in terms of transactions. So I think all this is kind of playing out, in terms of valuations of all these companies. A couple of years ago, before these companies got listed, they had a very huge support, from the pandemic as well, because a lot of the trends had moved to digital.
Yeah.
And now, things are moving from digital to offline. Plus, there is this overhang of the macroeconomic uncertainty, and there's this overhang in terms of getting valuations, right, and also the pressure in terms of showing profitability. So I think these are things that are weighing down on the valuations.
But Karan,
some of these companies,
you listed are also profitable. They might be a minority right now. They might be very few in numbers. But the likes of Nykaa, which were profitable even before listing, they have really taken it on the chin. 20% down last 1 month. I think only Paytm is one of them, which had some takers, which has still which is in the green as far as the 1 month move is concerned. So, what is the valuation picture like? Are people more comfortable buying perhaps Paytm after getting beaten down significantly vis-a-vis the likes of a Nykaa or Zomato, which has some potential to show some improvement in financials?
I think, two things here the investors are looking out. One, of course, is, they are more comfortable buying names which have got a very strong growth rate, perspective from here on, and also with a proper path to profitability in terms of, the profit margin increasing on a consistent basis. Now, if you look at companies like Zomato and Nykaa primarily, I think both these companies, are seeing some sort of convergence in terms of growth rate, right? If you look at Zomato, they were growing at somewhere close to 35-40% in terms of GOV, and now their growth rate is coming down more towards 25 to 30%. So there's a convergence because you have to showcase profitability. Again, in the case of Nykaa as well, similar story. I think the growth rates in H1 was 39%, but I think in H2 they may not be able to do growth of more than 30%. So I think that's the clear understanding here that companies which are able to showcase 25 to 30% growth rate with a proper path to profitability are the ones which will probably sustain or probably increase in terms of multiple re-rating. But the moment the growth rate for these digital companies comes down below 25%, which is a risk and which may also happen in the next 6 months, I think these companies will selectively see a big re-rating. And I think in the case of Nykaa, I think BPC remains to be a compelling play, but there are some issues around competitive intensity. However, we don't believe that there's going to be like a big negative impact on them because they have that recall. They are the market leaders. The market is here to grow. They might just see some minor, convergence in terms of growth rate because of competitive intensity. So these are things which are playing down on both these companies. For a Zomato, I think what's playing down is the regulatory aspect of it. You have got the issue on take rates with NRAI, with CCI. So a lot of concerns which are coming on the business model, which are challenging these premium growth rates, and a lot of pressure, in terms of proving the path to profitability.
Right. Thank you so much, Karan, for flagging off all these concerns, these potential headwinds, as well as the opportunities for these companies to perform going forward. With that, let's quickly touch base once again with Ajit. Ajit, your picks for the day, if you could highlight, what are they?
Yes, Karan. So considering like one sector which is holding strong despite the recent consolidation trend in the index, metals. So from the metal space, VEDL looks very strong to us. So in fact, after JSW Steel and Jindal Steel, which are the top performers, now we are seeing that VEDL is also catching up with the leaders, and very short-term target is close to around 336, but one can wait for 350, 355 levels also in case of the review is positional. And one should maintain a stop at 317 for this long trade. Another stock which we like from the auto basket is again a leader because in the beginning of the recovery from the auto counters, M&M led the rebound, and after spending nearly 5-6 months under consolidation, it looks set for a next leg of up move. So one can look for buying M&M also at the current levels with 1390 as a target, and 1285 should be the.
Okay, all right. Thanks much. In fact, a lot of people were asking about Vedanta, so I hope it gives you some visibility and some clarity on what's happening. Ajit, thanks for joining us and for flagging off the technicals for all of these stocks and more. With that, it's a wrap on Morning Trade. Thank you for tuning in.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.